Time for our weekly market monitor. He has names of growth stocks that he says can weather the latest market volatility. This is his first time on the program. We welcome Greg Hahn. He's President and Chief Investment Officer at Winthrop Capital Management. Greg, good to see you. Thanks for joining us tonight.
Thank you.
And as it happens, these are all three Dow components. We start with Disney. Now, I can imagine that people are not going to exactly buy it for the yield because it's only 1%, and the stock is at an all-time high right now. But obviously, you think there's more growth there to be had, yes?
Yes, we've weathered the storm with Disney, but it's at a critical turning point, and we think the potential now with Disney Plus and the growth in the subscriber base is going to be meaningful not only for revenue growth but also for their operating margins.
Next on the list is Nike. You say their revenue growth is accelerating. The stock has done pretty well, up about, let's say, 16% for this year, but you still think there's room for more.
Nike's a shift in an apparel company to almost a technology company. So their move into this direct-to-consumer marketplace and being able to buy direct and still balance the traditional retail distribution is going to be, I think they can manage it well. And that's a huge growth opportunity. And the other thing is the 2020 Tokyo Olympics will be a big catalyst for sales.
And finally, Cisco, you like this one. It's been in a tough category lately, but it has done well in the last several months. And they just made a huge acquisition this week, $3 billion as well. What do you like here?
So this was a recent addition this year. And we really, we built it because of the 5G play out. We're looking to make a play in the 5G space. But we also like their position in cloud technology. So the acquisition of Acacia Communications helps build out the fiber optic piece, and it also gives them an entry point into China, which up to this point, they really have had a minimal exposure into the whole China market.
As Bill mentioned, we're sitting at all-time highs. I mean, it's been a record week. Do you think this market has substantially more to run, especially if the Fed does cut rates?
Yeah, so our whole thesis this year is actually declines in earnings growth. So we are pulling risk out of the portfolio. These are three ideas that we have that we really like because there is catalysts for earnings growth. But throughout the market, that's not the story. It's really try to button down and play defense going into the second half of the year.
Very good. Greg Hahn with Winthrop Capital Management. Again, thanks for joining us tonight, Greg.
Thank you.